You walk into a bank. You sign a few papers. You take a loan. And suddenly, money exists. Not transferred, not moved from someone else's account. Created. That sounds wrong, because no one ever told you that borrowing money actually creates money. But that's exactly what happens. And once you see it, you can't unsee it. Right now, debt levels are exploding. Governments, corporations, households, everyone owes everyone. So the obvious question is simple. Who is actually creating all this money? Because it's not who most people think. Let's start with the story we're taught. We're told banks take deposits from savers, then lend that money to borrowers. Nice, clean, comforting. It also happens to be mostly false. Imagine you go to the bank for a $10,000 loan. You don't see the vault. You don't watch a pile of cash move around. The bank opens your account, types a number, and your balance jumps by $10,000. No one else's balance goes down. That money did not exist 5 minutes ago. This isn't a conspiracy theory. It's stated clearly by central banks themselves. When a bank issues a loan, it simultaneously creates a deposit. Loan first, money second, not the other way around. So, who created that money? Not the government, not the central bank, not taxpayers. A private commercial bank with a keyboard. Here's where it gets uncomfortable. That $10,000 is real money. You can spend it, transfer it, buy a car, pay rent. But the bank didn't give you existing money. It created a liability for itself and a debt for you. Two numbers appear. Your asset, your obligation. Money and debt are born together. They are inseparable twins. Now let's slow down and make this simple. Every dollar in your bank account is someone else's debt. Everywhere. When you repay your loan, something strange happens. That money disappears. Not moves, not recycled. Destroyed. Loan paid off, deposit erased. Money is created when debt is created, and destroyed when debt is repaid. This means the entire system depends on one thing continuing forever. More borrowing, more debt, more loans. Because if everyone stopped borrowing tomorrow, the money supply would collapse. That's not opinion, that's math. Now here's the irony. Banks don't need deposits to lend, but they do need one thing: permission, regulation, capital requirements, and confidence. As long as regulators allow it and borrowers believe they can repay, money keeps appearing. Central banks don't directly create most money. They create conditions. Interest rates, liquidity, emergency backstops. They influence the price of borrowing, not the act itself. Over 90% of money in modern economies is created this way, by private banks, through loans, quietly, digitally, relentlessly. So when people say there's no money, what they usually mean is there's no one willing or allowed to borrow right now. Now let's talk about hype versus reality. We hear that banks are intermediaries, middlemen, passive actors. In reality, they are money factories with legal limits. Factories that profit from interest on money they created at near zero cost. You pay decades of interest on money that didn't exist before your signature. That doesn't mean banks are villains. It means the system works differently than advertised. And that difference matters. Because when things go well, the system feels invisible. Growth, rising asset prices, easy credit. But when confidence breaks, loans stop, money stops, economies freeze. That's why financial crises feel sudden and brutal. The money wasn't stored anywhere. It was sustained by belief. Now zoom out. If money is created as debt, and debt requires growth to be repaid, what happens in a world with limits? Slower population growth, resource constraints, aging societies. The system demands expansion. Reality does not always cooperate. This tension is why debt keeps rising, why bubbles form, why crashes repeat. Not because of greed alone, but because of structure. So, the next time you hear about money printing, or bank bailouts, or rising interest rates, remember this. Most money isn't printed. It's promised, typed into existence, backed by your future work. And the real question isn't who creates money. It's this. What happens when people stop believing that tomorrow will be bigger than today?